Hello, everyone, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, January 3rd. Hope you all had a wonderful new year. Very excited to talk crypto today. CJ and I were joking around before the show, and one of our New Year's resolutions here is to be, a little bit more reflective, a bit more hypercritical of some of the, models that we hold dear to our heart, including the stock to flow model, CJ. So we'll talk about that. I also kind of want to do a broad overview of 2022, what some trends we saw kind of prevail in 2021 and how they may carry over in 2022, including retail participation, DeFi, and just some trends to watch here as we enter the new year. But before we dive into all those things, CJ, how are you doing, my friend?
Doing well, Monty. Thanks. Not a big New Year's revolution type guy or resolution type guy, but I think one of the things that's difficult about being a trader and investor is that you have to be so hypercritical of yourself and the difference between reality and expectations. So, I was thinking about stock to flow and how those expectations have actually differed from reality because at this point we would have assumed that Bitcoin would have been over 100k, Ethereum would have been over 8k or 10k of something of that sort. So why was that not the case? Where have reality actually differed? And what I think that model discredited or just didn't take into account was things like Luna becoming a $50 billion asset or like Solana becoming a $60 billion asset because Monty made this point earlier when we were talking. Obviously you have the China sell pressure and things of that sort, but overall, that hockey stick part of the pattern in stock to flow is created most likely by retail capital at the end of a bull market, and you don't see new users in the space going to Bitcoin or Ethereum. You'll see Willy Woo paste the Bitcoin minnow wallets are climbing, but that's not like the reality of the situation, because the reality of the situation is that people are going to chains like AVAX and chains like Solana because they want to be able to earn yields. A lot of the Bitcoin community and like Ethereum maximalist community kind of has this, like they've already become absurdly wealthy just being early in those projects. So there's a disconnect between that old like OG mindset and the actual new users who are coming into the space who, could really use $1,000 or $10,000 just yield farming. So they're coming into the space taking that risk, and they're not going to Ethereum and Bitcoin. They're going to chains like Avalanche and Luna. This is a great example where you had this project known as Synthetics on Ethereum. And during the bear market, everybody thought it was going to be this revolutionary thing where you trade tokenized stocks and tokenized assets. But Luna basically did the same thing with Mirror Protocol, but with totally better execution. So now all the users who were going for that demand have now moved over to things like Luna and other like layer ones. So, kind of to sum all this up, Bitcoin and Ethereum are kind of like philosophy coins where, the only new users who come into the space in 2022 are just buying them, and then they let them sit in their Coinbase wallet, and then they hear people like, Raoul Pal or Pomp talk about these stories of Bitcoin and Ethereum. But nobody's actually using the chains because it's completely infeasible. So that's where you get this massive disconnect. And so ultimately, like, what does that mean for us going forward? And like, how do we kind of adapt to that changing situation? Me personally, like, I still hold Bitcoin and Ethereum in like a passive like way, but I don't like, it's not where the majority of my active capital is. My active capital is strictly focused on like layer one alts going into the new year, and potentially some layer two plays as well. Potentially games, or basically any application where you can say, all right, how fast can it grow to 1 million users? Because that's when you get these types of relationships where you can actually be early to a product or to a project. And that was kind of the key difference between like 2017 and now, is that you have constant opportunities. I think this market cycle has been way more forgiving than the 2017 bull market, but a lot to unpack there. I got to let Monty talk before I talk through the whole show. So please.
No, you could definitely fill the whole show, CJ. I don't think anyone would be too upset by that, me included. But this isn't just speculation, CJ. What you're saying is backed up by, some hard metrics from sources like Glassnode. So I want to share this, just a few charts here with you guys. And I talked about this on the cocktail hour on Friday for those of you who were there. But I really think that, to CJ's point, this was a prevailing trend in the later half of 2021. And I think that, it could definitely be something that continues into 2022. Now, this is Bitcoin's total transfer volume broken down by size. And what I'm looking at here is transfers of 0 to 1K. This is what you would, generally classify as a retail transaction. Most institutions don't, deal in transactions of this size. And as you can see, at the beginning of last year, when we really started to see an increase in, positive price action, increase in speculation in Bitcoin, we saw these transfers rise, implying that retail was participating in this trade. They were, part of the reason why price was being propelled to new all-time highs. But what's most notable in this second half of the year here is that, these small transactions have been more or less non-existent in the context of the recent price action. And it's not just for these, prices as well. We can go to the next tier here, 1K to 10K, also still in the realm of retail transactions here. Again, still not even close to recovering from levels that we reached at the, bull run here in the beginning of 2021. And CJ, we're talking about the stock to flow model and how it didn't necessarily account for these various layer ones popping up and becoming, as big as they were. And I think that that is a great point. Part of the stock to flow model, let me just actually pull it up real quick. Part of the stock to flow model that, is so important is that retail participation. When we get those parabolic legs up in these green portions of the stock to flow model, that tends to be accompanied by retail participation in Bitcoin. But what we've seen here is that retail participation just hasn't been here. And that's why we're not getting that parabolic price action to 100K. And one thing that is somewhat encouraging in the context of Bitcoin's price action is on the other end of the spectrum. If we look at what is, kind of lifting up this market, it really is those big players, those institutions, the whales that we talk about so much. If we break down this transfer volume by, transactions of over $10 million, which, definitely would fit the bill of whales or institutions, actually you can see here that they have been transacting a significant amount. They, actually have been reaching levels that we reached back earlier during our rise in 2021. So interesting to note the dynamic of participants in this market. Last thing I'll say is that I just want to tie this in with something that I think, really paints a clear picture here. And that is the total value locked in all layer one chains. I think this, if you're looking for the answer to where the retail participation went, they didn't completely leave crypto. They're just participating in the DeFi ecosystems of various layer ones. And we talked about this earlier in the week, CJ, or earlier last week. But if you were participating in DeFi at the beginning of 2021, there's a really good chance you were doing it on Ethereum. At the beginning of the year here, 97% of all DeFi, of all total value locked in the layer one chains was held on Ethereum. Now, at the end of the year, that number decreased all the way to 62% as it gave up so much market share to, chains like Terra, like Binance, like Avalanche, Solana, Phantom, Polygon, and many more. So I think there's a clear, divergence in this participation here that we're seeing in Bitcoin and this participation here that we're seeing in these layer one DeFi chains. So I think that's a trend that really started to emerge in the later half of 2021 and is likely going to continue into 2022 here, CJ. So, as we enter the year here, I have my eye on, Phantom, some of these smaller layer one chains that I think, in terms of TVL, market cap to TVL, are well positioned for a nice move to the upside here. So, yeah, that's what I'm looking out here for in 2022. But, overall, I think there still is tremendous opportunity for the retail participants. It just may not be in Bitcoin or ETH right now.
I really like that like massive drop in Ethereum total value locked on the chart, and it's because there was this stigma like back in 2019, 2020, where it's like if you're going to innovate and if you're going to build something, like you do it on Ethereum. Like there was a lot of stigma of leaving cross chain, but eventually you see guys like Stani from Aave who are like, all right, I'm just going to do it on Avalanche now. And so they move and make their thing. They make Aave multi-platforms with, Matic and Aave now, or Matic and AVAX. And then you have the same thing with Stani, or with Andre, who's like, all right, I'm just going to build Yearn Finance on Phantom now because Ethereum can't scale. So that stigma of leaving Ethereum to build on other chains, I think, is not as strong as it used to be. And like the problem for Ethereum is that there's no guarantee that you get those users back, even if you release your sharded chain or your scalable chain. The thing that I think Ethereum still has going for it is it's this ultrasound money. It's trying to be kind of like Bitcoin in the sense that it wants to be hard money. So it could end up fulfilling some type of psychological value like silver to Bitcoin's gold or something. I think that has it has a very strong case. Also, you have all of these chains that have Ethereum virtual machine compatibility. So, that kind of enshrines Ethereum as like the original OG chain, but like there's no business model there that all these other Ethereum virtual machine compatibility chains have to give money back to Ethereum. Like there's no value accrual from that particular point of view. So I still think Ethereum and Bitcoin will go up because the store value use case is strong enough. But like the new users, I think if you want to make bets on new users, I think there's a lot of opportunities still in these layer ones and potentially a new theme in layer twos that we haven't really seen come to fruition yet. But it's quite interesting. I don't think there's any shortage of opportunity in this market. But we'll get to some market analysis in just a moment here. But Monty, you have any thoughts on that concept as well?
Yeah, CJ, I think that's a great point that, the retail tends to look for the fastest money. And it doesn't seem like, right now, Bitcoin and ETH fit that narrative. It's true that, the store of value narrative, I think, is stronger than ever for Bitcoin and ETH. I mean, look at the fact that Bitcoin is held up at these price levels despite that lack of retail participation that we were just talking about. I think it's proving itself to be a great store of value, even without, the mania that typically accompanies these bull cycles and positive price action. But ultimately, I think it just comes down to the fact that retail tends to look for the highest yields in the shortest amount of time, and right now that just isn't in Bitcoin or Ethereum. And you have all these various layer one chains popping up with these DeFi protocols offering tremendously high yield on very short term time basis, month over month, even week over week, day over day in some cases. So it makes sense to me that that's where the retail just seems to be parking their money at this point in time. And I think going forward here in 2022, there's going to be a lot of value in identifying some low cap assets where retail might potentially find some value. So I think that's going to be one major thing that we'll be looking for here in 2022. But CJ, I know you published a couple trade insights over the weekend. You want to dive into those?
Yeah, for sure. I also want to hit Bob's question here about a potential head and shoulders on BTC and just talk about Bitcoin collectively as well.
Let's do it.
So personally, I think we're very I think this is most likely the bottom. I mean, that came in at 42K and we probably won't test down. Many for a lot of the reasons that we didn't test down here as well. I think in hindsight, it's actually going to be like, if you remember how individuals felt back in this particular time, like we were thinking that there was a potential of going into like a bear market. And although we haven't seen the strength in the current trend, when we look back at this area of time in hindsight, it was like, all right, we were clearly going to go up. And I think this time that we're currently in hindsight, is going to appear very obvious as well. So even though we don't have like positive price action or strength in the immediate term, I still think that we're forming a macro bottom here. And, in terms of like the head and shoulders, yeah, you do have a quasi type head and shoulders pattern here. But I mean, you had the same thing here. And like, that doesn't mean you need to break down to the next, lower leg. The head and shoulders pattern can formalize and can go all the way down here and then still bounce. It's only when this neckline is confirmed and like broken that you can say, okay, well, now we expect price to continue down to the 30K region. But even if there's a disconnect between the fundamentals, like the head and shoulders pattern, it's not really valid. I don't really see it as being valid. I would put much more greater emphasis on like an inverse head and shoulders pattern like this, because the altcoin markets, like, we are not seeing like bear market type activity. Like this is another very similar head and shoulders pattern with a completion that ends at like 350. So, we're chasing those bullish patterns in the altcoin markets. And meanwhile, Bitcoin just is not seeing capital inflows. I think it needs to see something like, an institutional partnership, not a partnership, but like an investment or something of that sort to be a catalyst for price. Otherwise, I think the L1s can just continue to go up if Bitcoin just remains rather stagnant. I mean, we've seen it before, and I'm willing to bet it will continue. But that's what I have to say about Bitcoin. I mean, do you have anything to say as well before we hit these doges of the day? Because it is a special day. We're going to be including some trade insights for the non-members here. So I hope you guys enjoy. But any thoughts on Bitcoin, Monty? Head and shoulders pattern, anything of that sort?
Yeah, I've seen a lot of people, I know we both like Nick Mertens and Data Dash, and he pointed that out as well. But I would agree with you, CJ, that right now, we are seeing similar market dynamics to what we saw during that period of consolidation during the summer. And one thing that I'll just quickly point out here for the Bitcoin chart that I think will be important to watch here in the coming days. And, this goes back to what CJ, I've talked a lot about short-term holders, the role that they're playing in this market. I'm encouraged by the fact that each time we come down and retest this, critical level here at around 45K, we see subsequently less and less sell pressure hit the market at this level. And to me, that tells us that, each time we have less and less short-term holders capitulating. And one thing that I talked about as critically important to reclaiming this, uptrend, getting back above the smooth moving average, reclaiming 53K, is shaking out some of the short-term holders here that bought the market top during November and October. So I think we're starting to see that. We're seeing diminishing bearish volume here, which is typically a bullish metric. We did see the same thing here during this period of bearish neutral price action in the summer. But ultimately, CJ, one thing that did propel us out here was a short squeeze. So we'll continue to monitor the funding rate here. Right now, the funding rate is more or less neutral. So it implies that we could have some shorts stacking up against, some longs in the market, but that has yet to, impact price. But we'll keep watching that, and ultimately, this level of 45K and the continued sell pressure that we see at this level. But CJ, very excited to dive into some trade insights that were published over the weekend because, there's some exciting projects. Not one of them, Helium, not a very mainstream project, but I really, really like the business model, the fundamental value proposition of it. So very excited to hear these trade insights.
Yeah, Helium is one of those where like it may not take over the world, but it could, like, in its impact. And the concept of decentralizing the internet, taking it away from central service providers like Comcast or AT&T. Are there any others? Probably not. I'm just kidding. But yeah, let's get into some of these trade insights. First, I just want to cover Phantom because it has been like one of the strongest. This was one that we had talked about weeks ago and have just been riding this trend continually ever since roughly like the 155 level. So I'm going to continue to hold this until completion if we see that. So, unless there's like major weakness, this is a trend that I just want to try to continue to ride, have some resistance levels overhead. But I think the true story is the fact that when you compare Phantom to Bitcoin and look at the FTM BTC chart, like we're already at new all-time highs, which is quite interesting. And if you look at it from a weekly perspective, like it looks like it could be going towards, that end hockey stick aspect of the cycle. Same thing, even when you talk about just the USDT pair. So for instance, you have that as well. So that's one that I continue to hold. But in terms of trade insights and what we published over the weekend, Yeah, I was looking at Helium as well as Nervos Network, and let's get into both of those and specifically why we decided to place trades around them. So we have had a little bit of a rejection ever since this idea was published, but there's a clear ascending triangle forming with some levels that could be taken out in the future. But there was a Dish partnership announcement to bring 5G to the world, not the world, but wherever Dish Network likes to do their thing. But they're going to use Helium to provide 5G internet connection. And after that, we had a subsequent rise of about 179% in just a few weeks. Had profit taking from that event. And now the fundamentals are starting to synthesize. And we're getting that ascending triangle with potential continuation to new all-time highs. So that's one that I decided to add to a little bit. If we go and look at the Helium chart now, we've actually had a little bit of a rejection, but we continue to maintain the ascending triangle. So that's one we'll be watching. But overall, 41 or 42 is really the breakout trigger there. And then, you look for a continuation to new all-time highs. So that's one that was published. Also, we have one on Nervos Network in addition. And this was another ascending triangle, very textbook in nature. A lot of hype after Nervos originally announced their Godwoken Ethereum virtual machine layer, where developers for Solidity can actually migrate their applications from Ethereum over to Nervos Network. And ever since we've had profit taking, so potentially we can see another breakout of that ascending triangle. So also, when you look at the liquid supply curve, we don't have any vesting schedules or unlock periods to increase the supply until April. So that should give us, a decent runway here, so that at least in the interim, there's not any unlock vesting schedules that could potentially put sell pressure on the market if founders and all of these ecosystem funds and strategic founding partners, things like that, they could be selling. But we're not going to get another one of those vesting unlocks until April. So, paired with that, and then we have Yoki Swap, which continues to gain users and has offered some really interesting yields on the CKB yoke pairs. This could create demand as well. So I like where the fundamentals are aligning. I also like where price action has been aligning in the sense that we're beginning to see that ascending triangle. Ever since we were rejected a little bit, that's okay though, because really the only thing you have to concentrate on is the trigger level. So as you can see, we were rejected from that breakout point, but ultimately the tension in this trend between buyers and sellers is just getting squeezed harder each and every day as we go closer to that apex. So if we are to get above the 2.4 level, expect continuation to about 3 cents. So that was kind of my thought process on CKB and Nervos. You also have some really interesting backers that you can go into and research that. But overall, that's what we were looking at. And I think those are some interesting opportunities. So overall, the layer ones and some of the layer two applications, I think, are just really interesting opportunities. But
Yeah, CJ, good stuff. And I agree. One last thing I want to leave you guys with is just a really, I think, solid tool to have in your arsenal this year. It's just the total value locked metric. And there are plenty of different sources for this. One I like to use is DeFi Llama, because you can break it down by the various layer one chains. And what we're looking at here is Phantom's total value locked. And, it's no coincidence that we're seeing this break into new all-time highs in total value locked, as we're seeing a break into new all-time highs for the Phantom Bitcoin pair. This to me is one of the most important metrics to watch in terms of gauging the health of a crypto project, especially when it comes to these various layer ones. And as you can see, Phantom has had a tremendous year in terms of increasing their TVL, breaking into new all-time highs here. It seems like the ecosystem is very, very healthy, and I'm happy to see that being reflected in price action. But overall, that metric of total value locked, I think, is very, very important for these layer ones. And, that's where retail seems to be participating right now. So going to be keeping my eyes on that going forward. Right now, I'm just going to continue to ride that Phantom train because it is looking very strong.
A layer 2 application as well that was originally shared by some of our community members, Josh and Aaron. And now you guys have moved on to a project called Magic, but I'm still exploring the old one that you guys brought up, which was quite interesting, known as Jewel, or more specifically DeFi Kingdoms. Speaking to Monty's point of total value locked, that one recently hit it hits $1 billion in total value locked. So this is a really interesting game. You can play it and check it out. I definitely recommend you guys to do so. It does have an inflationary token, having this total supply not fully unlocked yet and whatnot. But I think we're at a point now where this is becoming such a hot game that it's growing its users so exponentially that I think it's able to offset the inflationary pressure of the Jewel token. And we've seen a really large increase, kind of in the same way that we did with Pancake Swap early on. So, you know, this one may be one that could continue to double here and then pull back really, really hard. Overall, I did buy a little bit just recently, and I'm going to try to ride this trend and continue this acceleration. Maybe it turns into something like Axie Infinity, or at least doubles to $1 billion in market cap here. So, at that point, that would be a nice trade. If we immediately see weakness and this so-called kind of bubble or this trend looks like it's been hurt, then I'll pull all the chips off the table immediately. But as of now, the growth rate in not only users but also total value locked, I think, is quite staggering. So yeah, definitely one that's interesting and worth watching. But I hope you guys enjoyed today. Please hit that like button and subscribe, as it helps us a lot and gets this information to as many as possible. But overall, I hope you have a wonderful day in the world wherever you are. And I'll give it to Monty for the final words here, sir.
Thank you, CJ. Yeah, very excited for 2022. I think it's going to be another revolutionary year for crypto. We'll continue to monitor these trends, and if you guys would like to join us where we share these insights on a daily basis, you can try it out at markrebellion.com/try crypto for just $7 for the first week. We have a pro charting service, a 24/7 chat with a community of traders from all around the world. We publish actionable trading sites like the two CJ just shared with you, and many more. And we also publish news, have an education curriculum, a whole lot going on over there. So head over there and check that out if you want to learn more about crypto. But I think that's all we got for today. We will see you guys again tomorrow on the Daily Crypto Byte. Have a great rest of your day and take care.